Good evening, ladies and gentlemen. For today's meeting, Audit and Governance Committee, 2nd of September. The meeting this evening will be live streamed to the public. A recording of the public part of the meeting will be available on the Council's website within 24 hours of the meeting. This meeting is a hybrid meeting allowing remote participants to join the meeting. Would remote participants please use their hand up icon to indicate if they have a question. In-person attendants are required to wear masks on entry to the building meeting room, but may remove them when seated. Scan the NHS COVID-19 contact tracking QR poster at the entrance to the council chamber. Would members and officers please remember to switch their microphone on when speaking and off when they have finished speaking in the council chamber, and ensure the microphone is positioned near you and speak directly into the microphone. Please can remote participants switch their microphones and cameras on when speaking and off when finished. Before I start the meeting, can you accept my apologies? I have some council's commitment and I need to leave 6:45 if meeting is not finished before that. I can understand Juveria is going as well. And after that, what we can do if the meeting is still going on, I can request Abbas, can you chair the meeting? Yeah, thank you. Any apologies for absence?
Yes, Chair. Apologies from Councillor Adris and also Councillor Burnett.
Okay, thank you. Minutes of the meeting, July 2021, 1 to 26. Everybody agreed on that? Julia? Rest of people?
Chair, yes, I'll say, yeah.
Thank you. Any disclosure of interest?
None that have been made aware of, Chair.
Thank you. Any urgent business?
Again, none, Chair.
We're moving agenda item 6, external audit plan update. It's verbal update from the external auditor.
Thank you, Chair. Can you hear me in the council chamber?
Yes, loud and clear.
Thank you very much, and thank you for accommodating myself to join remotely this evening. This is a brief update from EY. You received an update from me at the last meeting and previously our position statement on the external audit. We have been making significant progress to conclude historic audit opinions for the 18-19 and 19-20 financial year. Following the decision that was made by the council associated with the stabilisation of Lao, we've been receiving a lot of supporting information from the council based on the specialist financial and corporate finance and other specialist advice that the council's had, particularly thinking of reports from Jacobs, Arup and Bevan Britton, and with the support of our specialists, particularly our corporate finance specialists, we've been working through the assumptions associated with going concern, the valuation of the airport, capitalisation of airport expansion costs, and we're now at a stage where we are reaching provisional conclusions on all of those areas. And I've been having conversations with Dev as the Chief Financial Officer and Robin as Porter as the Chief Executive on our provisional conclusions from an audit perspective and what further information we require from the council to consider before we reach our final audit opinions and go through quality assurance and professional practice consultations. Speaking to Dev earlier this week, our objective is to aim to get through the remainder of our audit work by the end of September. We are obviously, that still remains a target. We have some areas to conclude. The areas that we're finishing off our final judgments and reporting on is the final position on the capitalisation of airport expansion costs associated with both DCO and CPAR. We have been considering the internal audit work on the procurement and contract management findings, the internal audit limited assurance opinions and the reports that have come before this committee in July. We've been considering the consequences of those for our reporting on the council's value for money arrangements and also general non-compliance with laws and regulations. And I've been through a consultation process to indicate what further steps we think the council should be taking to address internal audit's findings before we sign off prior year audits. If I just take you back to the position associated with the group arrangements with LAL, I've mentioned capitalisation. I would also say the other key theme to conclude out on is the valuation of the airport. The work we've been doing has been seeking to bridge the work that the council have had performed for it by both ARUP, but also a evaluation that's been performed by LAL by Deloitte, and making sure we can bridge differences in valuations between both specialists and determine what that means for the accounting valuation that's included in the financial statements. And we're following up that now with our real estate team. And then finally, it's the disclosures associated with both going concern and post-balance sheet events in the council's group accounts that look at the council's continuity of service provision for the next 12 months and beyond, the liquidity viability position and assumptions within the group. We have had a cash flow forecast from Dev, which we're up to the end of March 2023, which we're working through at the moment to check the assumptions in the cash flow forecast. And we're also looking at the adequacy of the disclosures that are currently being updated by the council on both going concern and post-balance sheet events. So we are drawing matters to a conclusion. We have some outstanding matters to resolve both ourselves and with the council. We're both working through those as fast as we can, obviously safeguarding our respective professional standards. And then I have to go through a quality assurance and professional practice consultation, as I think I've advised this committee before. And I think this committee have asked me, and through executive meetings as well, that when we're in a position of concluding the audit, we should be arranging an extraordinary meeting of this committee to take our final audit reporting. And we will be indicating probably through yourself, Chair, when we expect that to happen. But as I say, our current aim is to get through the substantive parts of the remaining aspects of our audit by the end of this calendar month. I'm happy to take any questions, but for now, I appreciate it's just an interim verbal update from me at this stage.
Thank you. Any questions? No. Thank you very much for your debate. We don't have any questions for you.
I'll probably go on. I'll probably go on mute and turn my camera off, but I'll stay in the meeting.
Okay. Thank you. Can I go agenda item 7, internal audit plan update, report from the audit manager.
Good evening, members. The internal audit report is an update on the work that the internal audit team have carried out for Q1. So the annual audit plan is risk-based. It's prepared in consultation with management, and it has been approved by CLMT and this committee. It's based on the assumption that the audit team will have a full complement of staff, and the days set have been 1,200 days. At the time of writing this report, we did have one full-time equivalent vacancy within the team. Recruitment to this post is currently on hold as the review of the internal audit team structure is currently underway. This is to ensure that the level and mix of skilled auditors required for the delivery of the service continues to be appropriate. We also have access to a framework agreement for the provision of internal audit services from Mazars as required. And as part of this year's audit plan, they will be carrying out our IT audit reviews. If I can take you through to paragraph 10 of the report in relation to the performance of the team, we have achieved 24% of the audit plan as at the end of June and issued 20 final reports. Of those 20 final reports, we issued 3 limited assurance audits. These related to procurement and contract management follow-up review, rent deposits follow-up review, and homelessness and temporary accommodation. These reports were finalised as at Q1, but related to work that we had carried out during the previous financial year. An update on these particular limited assurance reports was provided at the last committee in July, and as they are limited assurance opinions, we will be undertaking physical follow-up reviews of the audit recommendations this year and providing the committee with a further update on how the recommendations are being implemented later this year. As part of our follow-up arrangements, we also follow up on the audit recommendations. As at the end of June, we followed up on 132 recommendations, of which 101 were high or medium priority. Of those, we've confirmed with management that 51 have been implemented, 36 are partially implemented, and 14 have not yet been implemented. And we understand that in some cases there have been delays in fully implementing recommendations because of the impact of COVID and services schools focusing on the responses to the pandemic. I'm happy to take any questions on that report.
Thank you for your report, Kancha. Any questions? Oh, thank you. You have anything else? No questions for you. Kancha, you have anything else? Or you?
No, it's a corporate risk update report as the next agenda item.
Yeah. And you presenting that one as well, isn't it?
That's right.
Yeah, that's fine. If you carry on.
Okay, thank you. So the corporate risk update report is again to provide the audit committee with an update on the authority's corporate risks. We use a 3x3 risk matrix to assess both the likelihood of the risk occurring and the impact on the council in the event that it did occur. We score the risk twice. So the initial assessment is known as the inherent risk, and then we take a second assessment, which is known as the residual risk, after considering the controls in place. Normally, the second risk assessment lowers the score, taking the controls into consideration, but sometimes it can remain the same. The risk assessment matrix also identifies the level of management action which is required for the varying levels of risk. The council's risk appetite has been set to the red, amber and green status that has been given to the risks. So where risks have a red status, these are considered to be high priority and unacceptable. So every effort must be made to reduce this level of risk to the council. Paragraph 7 of the report discusses the 4 T's of risk management, which summarises the different strategies that can be used to manage the risk. So you have tolerate, where we can accept the risk, but they still need to be monitored and reviewed. You have terminate, so you can eliminate the risk by terminating the activity or doing things differently where that risk occurs. You have treat. This is the most widely used approach, and this reduces the impact and the likelihood of the risk occurring through effective control measures. And you can also transfer the risk. So this is where we transfer the implications of the risk to a third party, such as insurance cover. Paragraph 8 of the report provides an update in terms of the last committee meeting. So at the last committee meeting, members were informed of CLMT's formal review of all corporate risks to determine their ongoing relevance, whether they align to the new strategic priorities within the corporate plan, and to identify and address any gaps or emerging risks. The next stage of this review is to seek members' perspective on the council's strategic risks through a risk workshop, which is being arranged for November. And once that's been organised, we will then take feedback and revisit the risks and hopefully provide a further update to committee. There are currently 32 risks on the corporate risk register. Since they were last reported to this committee in July, there have been no changes to the corporate risks. There are still currently 10 high priority corporate risks, and these are detailed in paragraph 10 of the report. The control measures have been updated by the risk owners, but the scores are still the same as they were reported previously. Again, since the last update, there have been a further 3 risks which have been identified for inclusion in the corporate risk register, and these are currently in the process of being agreed. So at the next committee meeting, we hope to be able to provide you with further details on this. One of these risks is in relation to a second risk on climate change, to cover the extreme weather conditions and the impact on people's lives, which was identified as a gap at the last committee meeting. So that's a risk which we're looking into, and hopefully this will be included by the time we report next time round. All of the risks, they're owned by the risk owners, and they receive automatic reminders to update their risks on a regular basis. Regular risk training is also arranged for both members and staff, and they also have access to the e-learning training system on the council's website. again, happy to take any questions on that report, Chair.
Thank you for your report, Kancha. Any questions, please, this time? No? Excellent. Oh, sorry. Andrew.
I just got one, or two actually. Page 46, end of the report. Is it a misspelling? It says population churn in Luton. Should that be changed, or is it churn and is it something like?
Yes, that's population churn. Churn, that's right.
Okay, does that mean change though? Is it like the change?
It's the changing of the population.
People getting older?
Yes.
Thank you. Other one, just on same page, the failure to achieve the emissions reduction by 2040 to net zero. So if we, which we do, we run an airport, is that like the carbon tariffs and changes? Is it planting trees? Because if you're pumping out emissions from an airport, I still can't see how we become net zero. So are we doing the trading to get our net zeros, or is it planting trees? I know a lot of the the aeroplanes, the companies like EasyJet will tell you you're planting 5 trees every time you fly. But how are we getting net zero in real terms? And do we know that? Sorry.
I'll probably have to take that question back to the risk owner, but there is a group which monitors the activity, and they do have an action plan in place to monitor that and targets that they've got to achieve as part of the Luton 2040 vision. I believe there are some targets within the corporate plan as well in terms of what the aims are to achieve that reduction target by 2040.
Thank you very much.
Thank you.
Thank you, David. Any more questions? No. Thank you, Kancha. Thank you very much for your report. Can I move agenda item 9 is annual audit and certificate fees 21-22. Report of the, I think, service director. Dave? Yeah.
Okay, Chair, thank you. So this is a yearly report which we bring to the committee. It's to deal with the annual audit and certification fees for 21-22. Just I will take you through the report briefly. Paragraph 4 says EY is our external auditor, and appointment of the auditors are done by PSSA's public sector audit appointment. And they also oversee things like appointing the auditors, monitoring the quality of their work, and settling any disputes which we may have with auditors in terms of fees. And PSSA commission auditors provide audits that are compliant with the National Audit Office Code of Audit Practice. And paragraph 6, on top of that, we have what we call the housing benefit certification. So this is a separate piece of work which we have to certify to DWP. And in this case, it's not appointed by PSAA, but we appoint the auditors. And for the year 21-22, it will be Grant Thornton. I would like to just briefly touch on paragraph 8, because audit has been an area where there has been concerns. Auditors have been struggling with staff completing audit on time because lack of resources. So there was a Redmond review which was done. So we are working on those recommendations. So we'll bring you a report back to audit committee on implementing those recommendations. And one of the things Redmond review have made some recommendation in terms of audit fees, in terms of audit practice, in terms of how that review can help auditors as well to secure those resources where they can audit and finish the audit on time. That was as part of the consultation process. So Chair, for your information, will be making those recommendations and bringing how we are going to implement those recommendations. Paragraph 11 talks about the scale fee for the following year will be 94. This is the same, it's unchanged from 2019-20, but one of the things which Redmond review has identified is the fees will have to be set at national level, but there might be discussion at local level depending on whether there is some additional complexity. And in our case, I'm sure Neil will comment at some point, is because you got an airport and because there's a council which got quite commercial in Vauxhall Home. So I think the auditors consider the council as not like a normal unitary, but a unitary with planned like group companies. So we will be having discussions with Neil about audit fee and what will be the additional cost but my understanding is there will be additional costs on top of the 94. So the 94 normally gets set for a band. So there is a band for certain borough. So there will be a scale, and there's another band which is a higher band for Big London Borough. And I think if Neil can join, explain us what his view from EY, which band Ernst & Young sake will have to be in, and it depends on the risk, depends on the scale, depends on complexity. So I don't know, Neil, whether you would like to join and just explain us from EY point of view and where do we sit. And we have been discussion, and we have been sort of raising our sort of taking it to PSSA as well in order to fees and to address what are the increases. So Neil, if you can, please.
Yeah. Okay. Thanks, Dev. So there's a bit of, I can hear myself back when I'm talking. I don't know whether there's something that could be done about that, but I'm getting a lot of feedback. Is that better?
Yeah.
Yes.
Okay, thank you. Right, so there's probably two parts to this. So the first is, as Dev said, a national position around the sustainability of financial reporting and audit in England, which has been the subject of the, as Dev said, the Sir Tony Redmond review. That review concluded last year with a series of recommendations, and now MHCLG are actively in the process of implementing a number of changes to the local audit framework to improve with the aim of improving both the market capacity, but also looking at the future scope of audit. And there's been a lot of recent consultations on that. So perhaps for you as members, it's worth being aware that recently PSAA have issued a consultation on their proposals for the future procurement framework for local audit, and MHCLG are currently out for consultation to the future changes in the local audit framework, with responses due by towards the end of this month. So there are significant number of reviews underway at the moment to try to improve the sustainability of the public sector audit system at the moment. And there are a number of reasons for that position, and part of which is the timeliness of audit opinions, but also, frankly, the increasing complexity that we're seeing with local government financial reporting, and also the work that we're having to do around our value for money responsibilities has increased the level of work we need to perform, including involving specialist resources, and I think that's across the board. So one of the initiatives that we've been taking in EY over the last 12 months is introducing something called pricing for quality, which is indicating what we believe the costs of the audit should be to address our professional and regulatory expectations and the high standards we set on audit quality, but also our view on an organisation's complexity, their readiness for audit, and other circumstances and risks that we're aware of. Which brings me into the specifics for Luton, and obviously it's slightly complicated because we still have open audits at the moment in the prior years, but Dev's absolutely right. We've been having active discussions with PSAA on the council's scale fee, and we believe that the scale fee, and this isn't just a comment on Luton, it applies across all of our public sector audit portfolio, we don't believe the scale fee is reflective of the risk and complexity of the organisation that we're auditing, and we believe the fees need to increase. If I just give you some context, in the 16-17 audit, a PSAA have determined a fee variation of 70,000. I think Dev will be providing more of an update for you on that at a future meeting, but PSAA have determined that level, and that's following a lot of detailed challenge from the council about the level of additional work that we've needed to undertake in the audit year in 16-17, a review of our files by PSAA, and an arbitration meeting involving PSAA, the council and ourselves to reach a final settled position as determined by PSAA. But it's fair to say that gives you a sense of scale about the levels of increase in fee in 16-17, and I've been having provisional discussions with Dev about my views on audit fees in the subsequent years of 17-18, 18-19 and onwards, which need to come before you as an audit committee and through the PSAA process. Some of those will reflect what we see on the council's single entity audit, but Dev's absolutely right. Quite a lot of this will be reflecting the risks and complexities sitting within the council's group audit, and the work that we've had to undertake in each year to review key judgments associated with the council's decisions associated with LAL. So if you think about for example, the 17-18 year, that would have been a decision that was taken in DART, on the DART scheme in that year, where we did involve specialists to review the decision-making process. In 1819, you know the position now where we're in with the current position on 1819 and 1920, and there will be significant fees associated with that level of work we've looked at, associated with capitalisation judgments, airport expansion costs, valuation of the airport, going concern, and that level of senior input that we're putting into some complex areas of judgment clearly brings with it a higher cost, and those are the things that we'll need to be granular about with Dev about. This is what it's taking to cost. This is the cost that we're being taken to undertake the audit. This is the areas that we're absorbing, either because of our own resourcing pressures or inefficiencies in performing the audit. But these are the areas where we believe there have been legitimate scope changes that should involve a fee variation, which I am certain will be reviewed in close detail by PSAA and involve probably a review of our audit file for each of the years that remain open at the moment. And so I hope that gives a bit more flavour for the fees from EY's perspective. And Dev, I hope that's helpful for what you were looking for from me to contribute at this stage.
Yeah, thanks, Neil. So then, just I may take you on paragraph 14. The fees for housing benefit subsidy is roughly in the region of 27,500. I've also attached some of the, in Appendix A, you will see the consultation from PSAA and some of the guidance and explanation given, and still the scope of the audit, as Neil mentioned, it's set by National Audit Office, how the scale works, how the challenge process works, and so that's some additional background information for the committee. Thank you, Chair.
Thank you, Dave. Thanks for your report. Any questions? Yes, Abbas.
It's every year, because housing benefit audit will have to carry out the audit every year to certify the housing benefit claim to DWP. It normally goes up, but that has been fixed for the following year. Yeah.
Is that okay, Abbas? Yeah. Any more questions? No. Thank you. I think Dave, next item you presenting as well, isn't it?
Yes. So
yeah. Sorry, Javeria.
Sorry, Chair. Can I please declare an interest in relation to item 10, being a director of LAL, open to the officer's advice whether or not I can actually stay for this and participate. Though I do note that is to do with the accounts up to the 31st of July 2021.
Yeah. Is that okay, Matt? Yeah, noted. Thank you.
I can participate then. Yeah. Okay. Thank you so much.
Yes, Dave.
Yeah. So thanks very much. At this stage, and just picking up from Councillor Chavira, is we are bringing the draft statement of accounts. So normally the process is it's already on our website. So I have already signed the accounts, but we have to bring it to this committee for you to have a look at the draft statement of accounts, and then it will go forward for the audit to be carried out. So this is according to the accounts and audit regulation. So we have to prepare the accounts and I have to sign it by the 31st of July. So I have to say, yes, we finalize the accounts and we put it on the website. So it's on our website. And then we start the audit. And technically speaking, the auditors are supposed to complete the audit by 30th of September. But I think because, as Neil mentioned, we're still going on 18, 19, 19, 20. So I think it will be unlikely that we meet that deadline. But we'll have to put a notice on our website to mention the reason why the audit is taking longer to complete. But the account is there for anybody to go and have a look. And just quickly, I would mention at this stage, I won't go too much in detail because that is coming back to the audit committee once the audit is completed. Then we'll have a much more detailed explanation as a presentation and much questions. But at this stage, I'm quite happy to take any questions. So I will touch briefly on the accounts and then some of the things which is in the governance statement, just picking up from what Kanchan mentioned. So the account is made up of a movement of reserves, which is in paragraph 6, the comprehensive income expenditure, which is equivalent like a profit and loss account in the private sector. You got the balance sheet, you got the cash flow, you got the HRA and collection fund. So in paragraph 10, we talk about the progress on 1819 and 1920, but Neil has already mentioned we are going through those, and our aim is to finalize those by end of September 1819, 1920. And the main reasons it says here, because there's still some discussion which are having mainly to do with LAL, how the capitalization is being treated. 2021 is well in progress, so auditors, no, not 2021. 2021 will start once we finish all this. I will be discussing in Neil to agree on the audit for 2021. So quickly, I will just take you, paragraph 18 is about narrative. So this put into context how the council is funded, where the income comes from. So you will see 80 million come from council tax. So this is a narrative statement which gives you a little bit of contextual information, and it goes on the financial position. That basically is a balance sheet. Where are the reserves, how much you've got assets. And paragraph 19 is about the AGS. And that's where we pick up if there are any weakness or any governance issues, any risk issues. I will just point out that the first risk you will see in this account is about the impact of COVID-19. So this is, I think, every council are being disclosing this, the uncertainties about COVID-19, the pandemic, the impact on the airport. This is a new risk which I've highlighted. And also you will see, I think in the third or fourth one, it talk about LAL financial performance and positions. And that's we know because of the passenger numbers. So you will see compared with last year, these are the two additional government statement where we put the risk and how it's being managed and what are the mitigation plan. So those are the things which I would like to highlight. And the core financial statement, which is from paragraph 20 onwards. So you've got the comprehensive income expenditure, you've got the movements in reserves, you've got the balance sheet. It's quite complex. So I would next time we'll do a very detailed presentation, and we'll do a sort of, probably John will do that. So he's smiling already. So we'll do a piece of technical training, maybe half an hour, just to explain about local government accounting. And then we do a presentation so that you understand the accounts better. Because sometimes I don't understand as well. So yeah, it's very technical and it keeps on changing. So then we talk about the usable reserves, the amount of reserves, and the cash flow. So the cash flow is very important, how much money is getting into the council, how much we're paying. So we pick like benefits, council tax, business rates. So we've got hundreds of millions of pounds which flows within the council. HRA, this is completely separate from the general fund, so that the housing revenue account and is expenditure of the council housing stock. So this completely separate fund. And then we've got the collection fund, because we collect the council tax, we collect the business rate, and some of them we have to pay to precepting authorities as well. So that talks about how much we collected in council power, in business rate, how much we've had to pay to central government, because an element goes to central government, and some of them goes to fire authorities. So that's what it talks about. It says Bedfordshire police authorities and fire authorities. So that is a bit, and then you've got paragraph 31, it's the group accounts. And the group accounts we consolidate with London Luton Airport and Vauxhall Homes, which are our wholly owned housing subsidiary. And the airport valuation, if you look at, is 500, 600 million. So when you add it with the council balance sheet, we're talking about a big asset. I would say on paragraph 32, the discussion taking place with LAL in order to assess the potential full impact of a special force majeure. And at the same time, as Neil mentioned, there are areas within the accounting treatment and judgments we are discussing. So all those, when it is finalized, Neil will be presenting a detailed report, which for an ISA report, plus if there's any adjustment